Yo, what is good, YouTube? We are back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. Today's video is going to be going over how you can create your own trading setup using ICT concepts, right? So a lot of people struggle with understanding how to put a strategy together, understanding how to create your own model. So I'm going to go over the things that you should use to put together your own model, and then some ideas that you can use to have your own model, right? So let's just get right into this. This shouldn't be too long of a video. It should be 8-9 minutes maybe. But we have some stuff here that we are going to be going over so you can create your own model for yourself, right? So we have what you need over here, what to use over here, and then down here some ideas you can throw together. Okay, so let's get the candles out of the way. So let's just go right into what you need to have your own trading setup. Right, so the first thing you need is you have to have patience. If you don't have patience, then you're not going to wait for your strict model setup, and you're just going to be jumping the gun, taking trades that you don't need to be taking. Right, so the first thing you have to have is patience. Patience in the chart and patience that the edge will present itself. Right, so the next thing you need is confidence. You have to have confidence after you have had the patience to wait, right? So let's say you've waited 45 minutes and your setup has finally presented itself. You have to have the confidence to place your limit order, market buy, market sell, whatever it is that you're doing in your model. You have to have the confidence to execute it and gather the data to show if the model is going to be profitable, right? So you have to have the patience and you have to have the confidence. Right, the next thing you need is a draw on liquidity. If you don't have a draw on liquidity, then you don't understand where the market is going to be going. Right, so if we are rebalancing to a fair value gap, or if we are purging sell side liquidity, you have to have an understanding of where the market wants to go. Right, so after you have had the patience and the model presents itself, you have to have the draw on liquidity and you have to have the confidence to take it. Right, now the last thing you need is PD arrays, right? If you're not trading off of PD arrays, then you're not really using ICT concepts to the fullest extent, right? You have to have PD arrays to understand where we are going in the market, which will help you identify the draw on liquidity. The next thing that we are going to be going over is what to use, right? So the first thing is higher time frame PD arrays. Okay, so you have to have higher time frame PD arrays in check to understand where the market wants to go, right? Which can be identified by an old swing high or low, right? Daily chart, weekly, 4-hour, depending on what time frame you are trading. Okay, so you have to have an old swing high or low as a higher time frame PD array, a previous high or a previous session high, previous session low, previous day high, or previous day low, right? So these two right here, previous session high, previous day high, one of those can also be used as your higher time frame PD array. Now, fair value gap is also a higher time frame key level you can be using, right? So we have these three things so far. Now, an order block can also be used as a higher time frame key level, and the last thing is an SMT, right? You can use higher time frame SMTs as your PD array. Okay, so these 5 are the main things that I use to trade, right? Higher time frame key level. I usually don't use order blocks as a higher time frame key level like the daily or the weekly chart, but I will on the hourly or 4-hour and under, just because I like the higher time frame key levels to be one of these 4, right? Without the order block. So, but you can obviously use order blocks as your higher time frame PD array. Okay, so you have to be using higher time frame PD arrays, and you can use these. There's also more, but I would prefer these 5, right? And if you want to use like breakers and stuff, you can, but once again, I'm not, right? So entries, after the higher time frame PD arrays are formed, right? You have to understand what you are taking an entry off of. Is it going to be a CISD, right? Order block formation, is it going to be that? Is it going to be a fair value gap? Is it going to be a breaker? or is it just going to be a turtle soup, right? So right here are the main things you want to be doing, right? So you need to have patience for a higher time frame PD array to get tapped. Then you have to have the patience for your entry model to form, but you also have to have the confidence to take the entry, right? Now, the entry is going to be based off the draw and liquidity. You have to have an understanding of, is the market going to reverse here and go to this high, this low, this fair value gap, right? So you have to have your draw and liquidity, and you have to have your PD arrays. Now, the PD arrays on the higher time frame are going to give you your entry model, right? If we have tapped an old high or old swing high or low, then you wait for your CISD, fair value gap breaker, and so on, right? So all of this comes together to create your entry model. Okay, so right here I have a few combining all of this to create an entry model, right? I just threw these together. I'm just showing you guys what it could look like if you created your own entry model, right? So let's say that we have a previous day high sweep, right? We just swept Tuesday's high, it's Wednesday, and we have a bearish draw on liquidity, right? We have 5-minute displacement lower, and you have a CISD, right? Enter on the CISD or the fair value gap, right? We're on the 5-minute chart here after taking previous day high. You have your 5-minute displacement, you have a CISD, enter on the fair value gap or change in the state of delivery, right? I mean, it's pretty simple how to create a model, right? And they don't have to be complicated. Oops, let's move this over. They don't have to be complicated. Okay, now the next one. Previous session low gets swept. We wait for a 15-minute fair value gap or an order block to be created. Okay, the fair value gap, the order block gets created, it gets tapped into. Okay, now we go down to the 1-minute chart. Okay, we have a change in the state of delivery. That's my entry model. Boom. I buy, I sell, or sorry, no, I do buy because we have a bullish draw on liquidity after previous session low was taken. Right? Simple model. You can use that. Right? Now the last one, a 1-hour fair value gap gets tapped into, a 5-minute SMT gets created. Now I'm going to enter on the turtle soup, right? You're buying and you're selling highs and lows there if you're souping stuff, right? That sounds kind of weird, but either way, we have a 5-minute SMT. I buy the first green candle that gets created after this bullish SMT gets made, and we have that 1-hour fair value gap there, right? I mean, it's pretty simple how to create all of this stuff, right? Let's move. Oops. This is off the, there we go. Okay, right here is everything that you could use to have your entry model, right? So creating your trading setup, what you need, what to use, and then a rough depiction of how to put all this together, right? It doesn't need to be complicated. It doesn't have to be extravagant. Hey, look at this. I have this crazy model, 95%. It doesn't have to be that. As long as you are putting together or stringing a bunch of wins together, having a nice risk to reward, that's what trading is, right? You don't need to have all this complicated stuff. So yeah, that's the video. Pretty self-explanatory, and I hope this helps you put together a model, right? It does not need to be complicated. I want you to understand that, right? So yeah, that's going to be the end of the video. Hope you enjoyed, and I'm out. Peace.